Hi folks, and welcome to this week's Connected Finance Talk. I'm here with George Milahopoulos of Connected Finance, and today we're going to be talking about multiple home loans and how we can consolidate those. So George, some people have multiple loans, home loans, credit cards, personal loans and car loans. Is it possible to refinance all of these loans into your home loan?
Certainly is, Monique. It's I'm coming across it quite often where clients have got existing loans prior to them purchasing a home. So they might actually purchase a home and they will also have a credit card and the balances run up a little bit. They might also have a car loan or a personal loan. So all of a sudden they've purchased a property and they've got multiple loans. So the answer is yes, we can definitely consolidate a number of loans into the home loan itself.
Okay, that's great. Now, what will a lender consider when assessing an application to consolidate your finances?
A lender will look at a number of different things. So when they look at a consolidation or a purchase or a refinance, they're really looking at the same things. So they're looking at the financial position of that client. They're looking at their employment history, what their income looks like. They're also looking at their security position, and they're also looking at the history of the actual existing loans. So if we're consolidating multiple loans, they'll look at the behaviour and the history of the actual loans we're consolidating. So are they in good order? And I will note, I've had scenarios where potentially there might be a dishonour or arrears. If that is the case, I do have other lenders that can definitely still assist in this area.
So that's a good point. We might talk about that one later. So what are the benefits when you do consolidate your loans?
Look, there's a number of benefits. Really, all of a sudden, it becomes a lot easier to manage. As you can appreciate, if you've got multiple loans, you've got a home loan, personal loan, car loan, credit card, they've got repayments coming out on different dates. So if you're consolidating into the one loan, it becomes a lot easier to manage. You purely just have that one repayment per month. Obviously, your interest rate's going to be reduced. You know, you're consolidating finance into the one home loan interest rate, whereas a car loan might be at a rate of 8 to 12%. A credit card might be getting charged up to 20%, as opposed to a home loan is below 4%. It's with a 3 in front of it. So therefore, you're going to be saving interest and saving a lot of money in the process. Ultimately, with a lower rate, you're going to have lower repayments, and that's probably the key thing with regards to consolidating. Absolutely. You're making it easier, reducing the interest cost, and you're lowering your repayment. The one thing to really be mindful of with consolidation is just to make sure it is the right thing for you. It's not for everyone. Majority of the times it is a great strategy, but as an example, if you finance the car, typically that finance term is over 7 years. So when you're consolidating into a home loan, you just have to remember you're now consolidating that loan into a 30-year term. So as long as you're comfortable with that, it's not a problem. So you just got to be mindful of a few different things.
Absolutely. Now, maybe you could just share with us some scenarios you've seen out there that might help some of our viewers understand this.
Yeah, I've had a few different scenarios. Two that come to mind recently is a basic scenario that I've just really mentioned, where it's a home loan. The client's actually had a credit card and a personal loan and a car loan prior to the home loan. They can afford this quite comfortably, but have just realised they can be saving money. Makes more sense. It makes it easier for them. So they've actually consolidated all those loans onto the home loan, and what it does is reduce their rate, helps them save interest, and now actually puts them into a position where they can actually make additional repayments to pay off their home loan quicker, because they've purely just got that one loan at a lower repayment cost. Now they've got additional funds to either pay off their loan a bit quicker. With another customer, they had some other plans. They said, okay, we want to go on a holiday. So now that we've got additional cash flow, we'll save up additional money to go on a holiday. So it really just depends on what your goals are. The other scenario was around a customer that had multiple loans. So quite an astute professional individual, was building a home. Throughout that process, accumulated multiple debts. So when I talk about a scenario where I do have multiple lenders that can consider scenarios, this is really on the other spectrum, where they had a variable loan, a fixed loan, 2 personal loans, 4 credit cards, same-day provider loans, so a number of different loans, and we were able to consolidate that into one loan, and made a considerable difference. With this client, we were saving them close to, or reducing their repayment, I should say, of close to $3,000 per month.
Wow.
With consolidating into one loan. So it was a massive difference.
Yeah, look, there's some great things there, and hopefully some great tips. And if you're in that situation and you do need to consolidate, I urge you to talk to George. And one of the things that George talked about was when you actually consolidate everything, it can go over the whole term of the loan. But one of our topics, and I want you to come back next week, is actually how to pay off your home loan sooner, where those things don't become a big issue. So thanks for spending time with me, George. Really appreciate it. And I look forward to seeing you again next week.
Thanks.